Welcome to Real Estate 360 with real estate expert Kenn Renner, back again for another month of numbers that we're going to dive into. But you said you had a lot of other stuff to talk about, and I know you're heading out to California.
Yes.
Soon.
Yeah.
Vacation, just going to go to the beach, Hollywood.
No, presentations.
Making a movie.
Yeah. Well, making a radio show, right?
Yeah.
So, yeah. No, I'm heading out there to really to reconnect with my clan out there, all the people that have bought homes for me and investment properties, and those that are following my podcast that we're doing here. And so, it's been almost 2 years since I was doing presentations out there and getting people interested in the Austin area.
Right.
And so, it was very effective. It was slow at start, but then it started to multiply as people learned to trust me and realized that I was really there to benefit them. And so, of course, when the pandemic hit, that created a whole new dynamic. And so, so the people that did invest and hung in there, they are very happy that they did. And now I'm blessed with all these referrals of friends and relatives. So this trip is not a big where I do a big dog and pony show, a big real estate investment seminar. This is more where I'm doing intimate one-on-one or one-on-6 in a conference room. Yes, we'll have some mastermind meetings as well, and we're going to talk about the power of the mastermind. So, and there'll be real estate masterminds because everybody gets together and they get their minds together. We learn from everybody else. We get to combine wisdom. Sure. So yeah, I think the people that have this is for my closed clients, my current clients, and their invited guests. I'm trying to keep it where it's more intimate than it is just going out and doing big giant presentations.
That way people feel free to ask questions. They challenge you a little bit.
Yeah, well, I mean, it's nice because, a lot of times this was reverse engineered. Normally they would come to a presentation and fly out here and take a tour with me, then buy a property and then close on it. Well, it kind of happened backwards. Now there's people, I've sold many homes, properties to people I've only talked to on the phone.
Right.
So I want to, connect, shake hands. I mean, honestly, some of my clients, thank you very much for buying with me and trusting me, but I might not even recognize them because, we did it all over the phone.
There's something to be said about shaking somebody's hand.
Yeah, and
there really is.
I want to honor them for their faith in what happened here, and believing in what happened. As we were talking about vision earlier today before the show, and that's one thing I was blessed with was being able to see what's coming down the future.
The big buzzword now is over the horizon.
Over the horizon, yeah, that's exactly outside the box, and that's kind of people believe me, got outside the box with me, and they benefited. The appreciation in Austin was something that was it looked like a hockey stick. Right. It was like this, and then boom, we had 50% appreciation. Now it's starting to slow down. We're actually seeing a little bit of pullback, which is healthy. But I'm going to tell you that because of the supply chain issues and because of the massive millennial wave of home buyers that are coming into their 30s and having their childbearing years, they're moving to the suburbs, which is where most of our people invested. And if they can't buy, they're going to rent, which is great for us landlords. But that whole big millennial movement, along with the supply chain shortage, will drive everything, all prices up, including real estate. That's why real estate is a major hedge against inflation.
Always has been, always will be.
Yes. And so those that have want to diversify their portfolio for not be all stock heavy, that's what I do, is help them build a portfolio of income producing, depreciable properties that help protect their taxes, build a state, and that's what we're going to talk about today.
All right. Well, let's get to it.
All right, cool. So we're going to go just quickly down the stats for Austin. I do this every month, but at this point, it's kind of getting to the point where it's like, okay, 28% appreciation last year over year. That number is going to start shrinking because the appreciation started happening really in a steep way about this time last year. And the effects of that will be calculated. You'll see this number come down probably closer to 20% or even less in the coming months, because the prices are already like this. And but with that being said, I don't think there's going to be any kind of big drop in prices. There are some discounts going on because some of the builders did overshoot because they had lumber price issues and things like that. They overshot their pricing, so we're starting to see some deals. And this is the time to do it. So before the big millennial rush in the springtime, while the interest rates are low, because inflation will push those interest rates up to curb the inflation, good time to be buying. It's a time where the builders and the sellers are starting. Well, you said that you had a house in your neighborhood that was like, what?
Oh yeah,
5 weeks. 6 weeks?
It's been on the market for 6 weeks. It's surprising to me.
Yeah,
I was very surprised.
So that's what I'm telling for those that want to sell right now would be a good time to think about selling because you've already got your bump in appreciation. Right. Now it's starting to bounce along. Okay, so definitely want to encourage those that want to sell and cash out, take their profit, move on, do 1031 exchange, go buy a vacation home, put their kids through college, whatever it is. So we're all blessed to own property here in Austin. So going to go over the Austin Round Rock MSA, which is the 3-county area, up 28%. Median price is $450. We're back up to 1.1 months of inventory, which is nice, as opposed to 0.1, which was last year. 0.1 month.
Yeah.
That's 1 week, 5 days of inventory last year. So that's what really started driving those prices up, was the lack of inventory and people continue to move. And then the poster child that was the highest appreciating county in the nation is where I live. A lot of our clients have bought in there is Williamson County, and it was up 37% year over year. It's funny, this chart, if you look at the lower right-hand corner, it showed months of inventory last year, 0.
Wow.
0.0.
Yeah.
Right now it's 0.8 months supply. So we're, a normal supply is 6.5 months. So we're still we're still very much a seller's market, but now is the time for both sellers and buyers to take advantage of this current atmosphere.
Is it rare? Is this rare good for buyers and sellers?
Yes, it's
Yeah.
more healthy.
Yeah.
Because it's also good for realtors because, like we had that one Leander property had 152 offers in it.
Right.
I mean, how much energy got expended? 151 families didn't get the house and one got it.
Yeah.
That's just frustrating all the way around. And so now giving a chance for people actually, a lot of people stayed out of the market.
Right.
That shadow inventory of buyers we're staying out of the market. So I want to go over some information about what a mastermind is. You asked me, what's a mastermind?
Yeah, you
Okay.
mentioned it in passing. I was like, what is that all about?
Okay, so I was fortunate enough to be invited to speak on some stages for some conferences that were associated with the Napoleon Hill Foundation. Okay, and so Napoleon Hill, of course, in 1936 wrote the seminal book that started the whole personal development movement called Think and Grow Rich. Mm-hmm. And part of that book, one of the more powerful chapters in that book is the power of the mastermind. And I said the same thing back in the day was, what is a mastermind? Basically, what a mastermind is when 2 or more people gather together with for a common purpose in the spirit of harmony. Then there is a third mind that's created. In other words, even more wisdom than the sum of the parts.
Gotcha.
So it's just great where we get into a room. I might be in the room with software engineers and people have started companies, and then I'm the real estate guy and think of all that wisdom that can help me in my business and
Right.
I can help them in their business. So once again, it is more of people have already involved in the purchase. I do have a presentation for the new buyers that just want to kind of know what this is all about. These podcasts are a really great place to learn more about real estate investing. But most of it's going to be either in a conference room or a small setting where I can really roll up my sleeves and brainstorm with our clients. So, Think and Grow Rich. Napoleon Hill wrote this book, and he interviewed the richest men for 25 years, richest men in America, the Rockefellers and Dale Carnegie. This is back in the 20s and 10s and 20s, and so he wrote this book called Think and Grow Rich, and the power of the mastermind is really masterminds now are all over the world, and they work. So that's why I said, let's do a mastermind. Let's do several masterminds. So Andrew Carnegie attributed his entire fortune to the power of the accumulated through the mastermind. These are quotes right out of the chapter of Think and Grow Rich. In fact, you can get Think and Grow Rich for free because they didn't renew the copyright
Oh, is that
50
right?
year later.
Wow.
So the 1936 version is actually copyright free. Another quote is, economic advantages may be created by any person who surrounds himself with the advice, counsel, and personal cooperation of a group of men and women who are willing to lend him wholeheartedly in the spirit of perfect harmony. This form of cooperative alliance has been the basis of nearly every great fortune. Next good quote here is, no 2 minds ever come together without thereby creating a third invisible, intangible force, which may be likened to a third mind. And it's the mastermind. Here's another great quote out of that chapter is, when the minds of 2 people are coordinated in the spirit of harmony, the spiritual units of energy of each mind form an affinity. And really in the book, he describes where the people that are all gathered in the room, once the mastermind and spirit of harmony happens, then all of a sudden you can tap into the wisdom of the entire room. So it's a collective wisdom that you can get tapped into.
Power in numbers.
Absorb power directly from the great universal storehouse of an infinite intelligence. This is the greatest of all sources of power. It is a source to which geniuses turn. It is a source to which every great leader turns. And infinite intelligence does not err, does not make mistakes. And so what we're looking for is that hidden treasure, and that's what I'm helping bringing people to is real estate. Right. And the goal for a lot of our clients is this, or actually 10 homes in 10 years, pay them off in 20. Now, I'm actually maybe 3 times. This is actually 9 properties. There's 9 properties I did sell to an investor from California and changed his life. He went from a $3,500 income on one house to $13,500 income on these 9 properties. So that's kind of the goal that we're doing. So I'm gathering together throughout the 12th, 13th, and 14th over the weekend at the Hyatt House in Cupertino. Mm-hmm. Right across the street from the Apple building. Mm-hmm. And I'm hoping to run into some Apple reloads, because that's the other thing that we're doing is helping people with relocating now.
Sure.
In fact, tomorrow we have some people that are coming out, 2 couples that are coming out from the Bay Area, and they're here to buy a home and relocate. And that's kind of, that's kind of what we do now. Is now we're moving into the people that we're investing. Now they're really actually coming out here and buying houses, primary residences. So in those masterminds, where we're going to be more granular, I'm going to talk about more about not just why you should buy a property, but more how to optimize it, and then how to build more portfolio so you can have fiscal financial freedom. And funny thing is, talking to my financial advisor, we revisit every 6 months or so, and he asked me a question again. He goes, "What's your number?" I said, "What's my number?" The number is where you would have enough income where work is optional. And I came around real easy, $20,000 a month. I'm like, okay, $20,000 a month, that's easy. So you can either get $20,000 a month through your life insurance, cash value life insurance at 5.5%. That'd be $4 million. That's how much you'd have to have. How many properties you need to have? It just depends. Probably 10 properties would do it. And so, or 20 properties even do it better. Mm-hmm. So we work those numbers, and we're going to talk to our clients about what's your number, right? And so when we'll make it so you don't have to work anymore. And I don't like the word retirement. And I know, Sandy, you don't like retirement.
No, I can't imagine. I'd go crazy.
So anyways, we're going to talk about the bundle of benefits. We're going to go deep dive into this, and we're also going to go deep dive into more homes and areas, and particularly homes that are off market. Because that's where I'm going after right now. I'm going to schmooze, and I've been schmoozing the on-site agents that when they get a property that pops on back on the market, it comes to me first. Mm-hmm. And because of my track record of being a good old boy with them and being nice and getting the results, they call me first. And that's the first thing I do. And you'll never see these properties hit the market. I got some other strategies that we're going to be doing that I don't want to really get into, but it's really about acquiring off-market properties that are not being challenged by everybody and their brother. So on real estate, the bundle of benefits, number 1 is income. And so you have a property that's providing income from you from the rent, and it's paying off your mortgage. Somebody else is paying off your mortgage. And whatever's left over is called positive cash flow. Mm-hmm. All right. So I do have some income numbers. We'll go with that over in a second. Your typical, my pro formas that I look at, and that people look at every time we put out an offering, we have a pro forma that shows what the numbers are. So depreciation, that's tax benefits, really. One of the best tax shelters in the world. We're going to go deep dive into that. We will actually have a financial advisor, a tax advisor, who owns over 200 single-family units, mostly in Texas, so he lives in California, mm-hmm. Texas and Georgia and some other states. But I mean, a tax advisor that owns 200 property, I want to learn from that guy.
Right.
Then also equity appreciation. That's what's happened. The hockey stick. Everybody hopes for the hockey stick, and it's happened. Thank you very much for those that trusted and followed through and believed. Leverage is another great thing. That's basically your loan, your mortgage. You'll be able to leverage. You'll be able to buy a property with only 20 or 25% that you own it, but you get 100% of the appreciation. That's leverage. And I've got a really cool equity calculator that we just put together that shows just very simply compound equity appreciation. And you can run whatever number of appreciation you want, 6%, 7%, 20%. It's pretty cool. And then it's predictable. Of course, this instant boom was not that predictable, but the bottom line is over time, real estate has a tendency to go up. And that's hence the protection against inflation. Mm-hmm. And then there's some great estate dispositions when you pass on. Right now, they're The current administration is trying to get rid of a lot of these. They're getting a lot of pushback on, let's say, the stepped-up basis that we'll cover. That's how you pass your properties to your kids without taxes. There's the capital gains, of course. There is going to be a raise in capital gains. So that's why we are going to go. The biggest bill you'll ever have in your lifetime is the debt that you owe the government.
Right.
So what we're trying to do is make sure that we don't pay more than our fair share. And in fact, we don't want to pay any. We want to pay any more than our fair share. We're going to talk about the cycles of the market again, but then the hockey stick and what happened. And so I think that's important going back 40, 50 years for people to understand. Got my pro formas here. We're going to be going over this is what I send out every time as a pro forma, but I added to it the equity calculator. And just without going into a lot of detail, this is when it was a $247,000 new construction in San Antonio, Converse area. And I did a simple 7%. In San Antonio, it was actually 20% last year, but I'm saying about 7%. And believe it or not, from your initial down payment, your closing costs, your return on your investment is 124%. So that's pretty incredible. In 10 years, it's like 480% return on your initial investment. So, and we've seen that's at 7%. We're not talking like 20%. Mm-hmm. So it even just at 7% in 3 years, you're up over 100% of your original. That's hard to get returns like that.
Very
predictably.
Very hard, for sure.
We're also going to go into to optimizing your properties. If you already bought one or you're going to property, we're going to talk about property management. We're talking about insurance. We're talking about taxes. We're talking about property taxes and all the ways to shave off. We're going to talk about how to get these things leased for the most amount of money, how to protect the asset, maybe put it into LLCs for asset protection so people can't get to you. So that's kind of what we're going to be covering, all these things in the mastermind. It's hard to do that in a 40-minute live presentation.
Right.
We're also going to talk about where our sweet spot is, and we're going to spend a lot of time on that, is where the great deals are, which is above trash properties and below the median. So that's pretty much, and new construction, low hassles. And then we're going to talk about our network. This is something that most brokers don't have. This is what people go with me. And of course, they don't pay me. The seller or the builder always pays me, which is great. You get all of this for free. I had a call yesterday. He goes, well, how much do I owe you for all this? I said, nothing. Because the builders love me because I keep bringing them more business, and sellers know me, and even owners, previous clients that want to sell. So they know me, and because I have this circle, this team of people and circle of networks of help that allow me to do what I do for my clients. And it's funny, people go, wow, you seem to be so busy, I don't want to bother you. I go, that's what I'm doing. My phone does not, believe it or not, does not ring a whole lot. I've got, we have 27 closings this November coming up, and it's all handled. The team handles it. You can put your head on the pillow at night and know that we've got you covered. Like I said, more than half the people who bought homes for me have never been to Texas.
Right. Well, you're going to go meet them.
Well, what happens is their friends told what I did for them, and that's how I build my business. And the thing is, if it doesn't work, they'll never come back and buy another one. If it works, they tell their two friends who tell their two friends. And so now I'm going to go out and shake hands with my friends in the Bay Area and give them as much wisdom as I can, and collective wisdom through the power of the mastermind.
Have a safe trip.
All right, I'll be back. I'll tell you how it goes. Thanks a lot.